Bitcoin has always thrived in extremes. Wild optimism followed by crushing fear, each cycle rewriting the same emotional script. So we ask again, can it break $100,000? For that to happen, more than speculation is required. Liquidity, policy shifts, institutional flows, and collective psychology must align. Start with liquidity. When global interest rates decline, risk appetite returns. When the dollar softens and capital looks for asymmetric upside, Bitcoin often stands at the front of that line. It offers scarcity in an age of expansion, a digital alternative in a system built on printing. Then comes institutional access. With spot ETFs in place, Bitcoin is no longer isolated. Mass pools of regulated capital can now enter without friction. Markets do not move on excitement alone. They move on sustained inflows. If those inflows continue, $100,000 is not a fantasy. It becomes a technical barrier waiting to be tested. Now consider supply. Halving reduces issuance. Less new supply meets potentially rising demand. Over time, that imbalance matters. But demand is the fragile variable. Bitcoin is now part of the financial conversation. With legitimacy comes scrutiny. With adoption comes regulation. Any policy shock or geopolitical tension can reshape momentum overnight. Still, under supportive macro conditions, six figures remain plausible. But here is the deeper layer. If the only reason we care about $100,000 is profit, volatility will shake us out. If we understand the structural narrative of scarcity and network effects, price becomes secondary. When Bitcoin eventually challenges that level again, headlines will scream, crowds will rush in, and doubt will quietly disappear. Markets repeat human behavior. So the real question is not whether Bitcoin can surpass $100,000. It is whether we will be composed when it does. Because in markets, the winners are rarely the quickest. They are the ones who remain unshaken long enough to see the cycle complete.